1st. Crude oil prices have fallen below zero once again today. This after the price per barrel in the United States slipped into negative territory for the first time ever on Monday. Crippling demand and a storage glut during the coronavirus pandemic effectively mean producers were having to pay buyers to take their oil. For more on this story, we can go across to our business editor, Stephen Carroll. Stephen, if you had told me last week that oil prices would, end up in negative territory, I would have laughed at you. What happened?
Demand for crude oil has slumped in the coronavirus crisis. It's down by as much as a third, as much of the world's economy is in lockdown. People aren't flying or using their cars as much as they usually would, and large sectors that use oil aren't using it. At the same time, supply has been reduced, but by nowhere near as much. So there's a massive glut on the market. This particular price collapse is to do with what's happening in the United States, where there's a shortage of storage for oil that's going to be delivered next month. West Texas Intermediate is a kind of oil largely produced and sold in the United States, and the prices that we're currently given for that are for contracts that will deliver barrels of oil in May. Storage tanks are pretty much full, and that's why we saw prices crash into negative territory. They dipped back there again in early European trading on Tuesday as well. To give you an idea, though, of how much that is a pinch point in the US market, today is the last day of trading for May contracts. From tomorrow, we'll be looking at barrels of oil to be delivered in June. But on the Brent crude international benchmark for oil prices, we're already talking about June contracts. Prices there around $22 a barrel, still very low, but around the levels that we saw in WTI last week, perhaps indicating the oil markets are expecting some sort of recovery of demand in June.
And what does this mean for the industry as a whole and consumers?
For consumers, it doesn't mean you're going to be able to fill up your car for free, because the price consumers pay at the pump, only a small portion of it is actually linked to the cost of crude oil. It's already fallen. It will most likely fall further, but the majority of what you pay at the pump goes in taxes and costs of refining and transporting that oil. For producers, it's a much bigger dilemma. This will mean very difficult time for both the countries that produce oil and for companies as well. They'll be hoping that this will be a short-term blip, but we won't really see a recovery in oil prices until demand picks up, and that's when the economy gets back to work.
Stephen, thank you very much for the update. Stephen Carroll, working there from home.